Hello, traders. Gary Wagner here. Approximately 2 o'clock in Honolulu, 7 o'clock in New York on Wednesday, 24th day of November, 2021. And this is the Daily Report for gold and silver. There's no easier way to put it except that the Federal Reserve got it wrong. They didn't anticipate inflationary pressures rising as high as they did and remaining as persistent as they have. Because of that, they are backed further into a corner and have to scramble to effectively try to curtail the spiraling level of inflation, and that means accelerating the timeline in terms of their tapering process and raising interest rates much sooner than originally perceived. Although gold did gain $4.90 today, about 0.25%, it did trade with a lower low, a lower high, as well as a lower close when compared to today's opening. Basis of the most active December contract, gold is currently fixed at $1,788.70. With the December contract of gold quickly coming to a first day notice in a couple of weeks, we have spot or Forex gold at $1,788.30, roughly the same price as December futures. Silver futures, basis the most active December contract, is currently bid up by about 12 cents at $23.56, and all of that occurred with dollar strength. The dollar today gained 0.37% or 36 points and is currently fixed at the highest value we have seen in quite some time, definitely the highest value this year, 96.85.5. This month, gold traders and investors have seen gold turn on a dime over the same concern, inflationary pressures. If we look at the low that came in at the first week of November, I believe this is November 3rd, at the conclusion of the FOMC meeting, at $1,758. And then on the 16th day of November, trade as high as $1,879.50. We saw well over a $100 rally occur during the first couple of weeks of November. And now, as we get to the conclusion of November, we have seen that same key reversal, trading from $1,879 at its high to its current print, which is $1,788.30. Almost a $100 differential between the current price and the intraday high on the 16th. If gold continues to trade under pressure, moving to lower pricing based on the concerns of inflationary pressures resulting in Federal Reserve accelerating the tapering process and raising rates sooner than anticipated, that is largely being factored into the market as we speak. But a further decline, what area would we look for to find some support? And to that end, we're looking at a chart that has a longer data set, which really spans the lows of the flash crash in August up to this most recent top at 1880. And then in red and blue, we have a smaller data set that simply covers the last leg of this rally from 1758. Today, gold challenged the 78% Fibonacci retracement of the shorter data set. That comes in at 1785, closed just above it. But if you look at the intraday low, that came in well below that and actually came close to touching the 38% retracement at 1770, which is from our longer Fibonacci data set. We could easily see gold test $1,758 before finding support. Of course, a lot can happen between now and the 15th of December when the Federal Reserve concludes the last FOMC meeting of the year and announces whether or not they have decided to accelerate the tapering process, and we will get our next revised monetary policy vis-a-vis the dot plot, which will be most revealing because it will contain not only current sentiment amongst voting members, but it will also contain the number of members that are looking for rate hike increases as well as the timing of that. And that will be critical in shaping gold through the end of the year and into January. I believe the key and critical price point to watch for gold, if it does continue lower, is 1758. That is the beginning of the shorter data set or onset of this most recent leg of the rally. This, of course, is the recent decline that we've experienced. Up until now, it has not given up as much as it gained during the rise from the beginning of November to the middle of November. However, if it takes out 1758, we could see a cascading effect in which traders would take it close to, but I believe just below 1733, and it would be these series of bottoms that came in end of September at around $1,720. All of it's going to be news-driven as market sentiment quickly shifts, and we saw how quickly it did shift with the report of the CPI coming out at 6.2 and today's PCE report coming out at a rate not seen since 1990 also. These are 31-year records that are being matched and challenged, and that is a substantial statement in and of itself. And on a personal note, with the holiday season beginning, Thanksgiving holiday occurring tomorrow in the United States, first, for all those on the mainland or in Hawaii and Alaska, I want to wish you a happy Thanksgiving. And I want to wish all of our members health and happiness and a return to some sense of normalcy after this prolonged pandemic and subsequent recession. This has been Gary Wagner wishing you, as always, good trading. We will talk to you on Monday for the next daily update and review. Have a great holiday weekend. Bye-bye.